Hey guys, Kunal here, Bulls on Wall Street, the guru to all your gurus. I am pumped to talk about this subject today. You know, everybody always talks about trading indicators. There's MACD, MACC, MACMAMA, all these kind of indicators out there. Everybody's always asking me about RSI and stochastics and so on and so forth. And everybody's always looking for this holy grail of indicators. But let me tell you, sometimes the simplest ones are the best. My favorite indicator that I use is called ATR. Today in this video, I'm going to tell you a few different ways to use ATR, which means average true range, and how to actually implement it in your trading for offensive and defensive ways to manage your trades. So guys, let's get this thing started. So first of all, let's talk about what ATR is. ATR is an indicator that is on every single trading platform. It stands for average true range. So what the heck does that even mean? So let's just go into the simplistic way of looking at it. It is the range that a stock moves every single day. So you have specific ranges for every single stock. So for example, right, Tesla has a $7 ATR. AMD has a $5 ATR. So what this means is that this is the range that a stock can move up and down during the day. So how the heck do we actually use this? So in today's video, I'm going to give you 3 use cases of how I use ATR and how I actually put them on my chart so that I can in real time use that knowledge for trading profits. So the first way I want to use ATR is with a subset of ATR, which I call ATR percentage. It is just a simple PCF criteria on TC2000, which means what is the percentage of the stock's price that it moves. So let's talk about how we use this ATR. One of the things that I used to do when I was a new trader, and actually when I was even more of an experienced trader, was I would often see stocks flying up. They'd spike up. And then I would wait for some type of consolidation. And then like as it broke the consolidation, I would buy it. And every time I would do that type of pattern, which is basically an offshoot of a flag pattern, the stock would fail. And I'd be sitting there like, what? I read all these damn trading books. I bought these classes. Like I've been talking to these traders. And this pattern keeps on failing on me. And one of the things that I had noticed was that a lot of times I would be doing this specific pattern. I would be doing it when the ATR is already used. So let's talk about some examples. So on the 22nd, AMD had a dip to $103.50 right at the open. And then it ended up shooting up all the way into the 109s. And then what you can see here is it starts to go sideways and shows like a little bit of a flag there. So a lot of times like I would be buying that flag without recognizing that the ATR had already been used. The ATR in AMD is about 5.5. So it's already popped exactly what? $5.5. So as you see it start to go sideways, what ends up happening ends up drifting off the rest of the day. The ATR had already been used. Often as new traders, we're a little bit hesitant in the beginnings of moves, especially when stocks are weak on the day. We're afraid to buy them. And so once they start spiking up and they're green a lot, right, we all of a sudden want to get in. But when that ATR is used, well, guess what? You start to see those patterns form and they don't follow through. And then even the subsequent patterns, when they pull back into the EMAs or the VWAP, they all just have lower and lower bounces because that ATR has already been used. On that same day, if you look at the chart of NVIDIA, it dips off into the open at 306. Well, NVIDIA's ATR is about $10 to $11 usually. So when it dips off and explodes at 315, it starts to clear out all these levels of resistance. And we're taught, right, when you start clearing out levels of resistance, what do? The stock is in clear and it's got more room to go. But what you start to see is that it hits 315 and then it just kind of fizzles out the rest of the day. Why? That opening push was so fast and so strong, and you used up that ATR so quick that it just didn't have the ability to keep going. You run out of gas. Now the cool thing is you can do this in reverse. And I think this is a really effective setup in bull markets, and I have been using this daily. So today in our chat room, Levi, who is our options guy, who runs an awesome options trading service, which for those of you guys that are trading smaller amounts of capital, want a little bit of juice on your large cap trades, or you're just short-term swing traders or like to trade high beta stocks, go check him out. But he had an awesome trade that we got into on Tesla. So Tesla spiked up to 187 on its gap today. And then what you started to see was that it just started to tank nonstop at the open in that first hour or so and got almost down to about 180. Well, Tesla has a $7 ATR. So while Tesla is starting to show like these kind of bearish patterns in the 180, 181, 182 zone, what ends up happening is like you start to look at it and think, wow, this is a bearish pattern, I should be shorting it, right? Maybe it's a bear flag. But what ends up happening is as soon as Tesla uses up that ATR on the downside, you start getting that big rip to the upside. So Levi comes in on the option side, starts buying this thing as it hits 181, and that ends up being the reversal because it starts to hit levels of support, but that ATR has been used up. And I've seen this over and over. In bull markets, oftentimes when stocks dump off and they show these kind of small-time bearish patterns, we're so trained from 2022 to keep shorting it and shorting it and shorting it, thinking that we'll just trend down the whole day. But what's been happening, and this pattern's been working nonstop the last couple months, is when that ATR is used on the downside, it'll round, show maybe a little bit of a bear flag, and then it starts to ramp back up so you can start using that as a way to buy potential dips. Now, you don't want to just do it blindly like a stock dips and use the ATR, but you want to start using that as a marker to start looking closer for patterns on shorter term time frames. Now, one thing to mention is if a stock has news out, good or bad, then the ATR means nothing, right? Because the fundamentals of that news take over and you're going to just follow that. So for example, right, like Nvidia has a $10 ATR, it moved, darn near 90 points today, right? So when earnings are out, that's totally different. But on just a day-to-day basis, ATR in a non-news situation holds true a majority of time. You can also use this for potential ways to get sell targets. Today, we bought the dip on Netflix as it started to pass over the VWAP and then go red to green. It had subsequent setups. So I ended up selling this thing near 367, and people were asking me, like, why would you sell it there? It's breaking over its previous day's highs. But one of the things that you always have to know is look at where Netflix was at the low of the day and look at where it was as it started to break the previous day's high. It had used up its ATR. Netflix has an $11 ATR. So you can use this as a way to potentially choose targets, but also to incorporate into your trading, whether you're longing or shorting in a counter trend manner. The last way that I use ATR is more for scanning purposes. So the market of stocks is pretty small for what I want to do. Obviously, if you're a small cap trader and you're just trading gaps and stuff like that, you're probably in big ranging ATRs anyways, and you're just, right, kind of doing those kind of gap and go setups. But if you're trading in a more professional manner, right, where you are longing and shorting like high beta names that are really liquid so you can get size into them, then you need to trade big ranging stocks that have, right, a lot of liquidity. But one of the things that I'll use is an ATR percentage. ATR percentage is the pink indicator on my TC2000 chart. So what that's essentially saying is, right, it's a percentage of the stock's price in terms of ATR. So I think that anything over a 5% ATR is a pretty good ranging stock. Meaning if you're a $100 stock and you have $5 ATR, you can catch 5-point moves, right? If you're a $200 stock, you have a 5% ATR, you can catch $10 moves. So this will get you into kind of bigger ranging stocks that can move up and down. Now, if you're going to trade like, say, larger cap stocks, like some of your mega cap stocks, then I think 3%, 3.5% is a good spot because those are just not going to move back and forth like 10% a day, right? So if you're looking at like a Tesla or a Netflix or something of that end, right, you'll get into those 3% ranges, which I think are fairly doable. One of the reasons I stay away from like, say, Apple or Microsoft out of those high cap names, the ATR percentage is 1%, meaning it barely moves, like 1% of its price. So like Apple's ATR is like give or take around $2. Microsoft is around the same. So they barely move. But like something like a Nvidia or Tesla, they have a lot more range for the same price, right? Tesla and Apple are the same price, but look at the ATR on Tesla, look at the ATR on Apple, right? And so I use ATR percentage as a way to really gather like if a name is going to be able to give me the back and forth that I need in terms of bang for the buck. One of the scans that I love to run is stocks that have 5 million shares or more in volume with a minimum 5% ATR. See what comes up on that. When you use that, what you start to see is some of these high-flying names like UPST, right? Its ATR percentage is about 13%, which is pretty good. It's got really good range. Affirm, AI even, right? The ticker AI's got an 8% daily range. So you have a lot more bang for the buck on something like that, and it's still really liquid versus trading something like Microsoft, where the ATR percentage is in the ones. Like you're really kind of scalping around for peanuts when you're trading that. You almost can't even trade equities. Trading that, you have to go to the options just for the leverage. So to summarize what we're talking about today, ATR can be used in numerous different ways, but it is a must in your trading. And what you want to do is stick it right on your chart. If you look at my charts, I've got 3 ATR numbers. I've got an ATR 5-minute. What that allows me to do is see how much a stock is moving around candle by candle intraday. I use 5-minute charts. So if it's moving around, say, $1 per candle, 50 cents per candle, it's going to give me an idea of how much it's moving around, right, minute by minute. So when I'm placing my stop losses, I don't place them too tight. For example, if you had an ATR of 1 on a 5-minute chart and you're using like a 20, 30 cent stop loss, guess what's going to happen? You're going to get stopped out. Then I use the actual ATR as ways to buy and sell counter trend when the stock's ATR is used. And then lastly, I use the ATR percentage, that's your pink line, for scanning and finding those kind of bigger ranging opportunities that still have liquidity in it. Guys, I hope this video helps. There are so many indicators out there and nobody ever really talks about how to use them, right? This is something you can practice and put in place right now. Guys, smash that like button if you enjoy this video. And feel free to leave me any comments because this is going to be something that we're going to be using nonstop. I think you need to incorporate it into your tool belt. Let me know if you guys have any questions. Take care.